Welcome back, everyone. My name's Adam, Rusmin, Victor.
Hi, everyone.
Thanks for joining us today. We're going to talk about Mag 7 and specifically one of them, Alphabet/Google, and whether Alphabet is maybe the best undervalued Mag 7 stock right now. Okay, yep. And the reason why is that if you take a look at Alphabet's share price, as of this recording year to date, Alphabet's stock price is down about 13%. Okay, yep. In comparison, Microsoft year to date is actually up 9%. Yep. So the question is something happening with Alphabet, its business model? We're going to take a look at that, and whether because its share price has come down, whether it's actually at a good, it's undervalued at this point in time. So we're going to discuss that. So why don't we just jump straight into its valuation for Alphabet?
So I have the Alphabet price to cash flow chart over here. So you can see over here they are actually traded below the below the averages, right? Which is actually roughly, you see, it's around the one standard deviation, negative one standard deviation, right? So basically, right now, companies that usually trade at around this one standard deviation, right, is a lot of bad news, right? So at the end, it's our job as investor to see whether the news that affecting this company, is it temporary or permanent, right? Okay. If it's permanent, then you should not be looking at this company already. Right?
Okay, so this is the thing. I mean, Alphabet is such a big company. Yep. Usually when it's undervalued, it's like time to jump in. Yep. One more thing is like, why do we use price to cash flow instead of PE?
Okay, yeah. So we used to use PE, right? But then throughout the years, right, there's a lot of adjustment to make to the earnings.
Especially for Alphabet in particular.
For Alphabet, right? Yeah. Because there's a lot of fines, a lot of fair value in and out and in the accounts and all this, right? So in the end, we decided to use price to cash flow because it's more stable and you remove all those one-off items already.
Yeah. Okay.
Right?
So for those who are wondering why we don't use PE for Alphabet, this is why we use price to cash flow. So at this point, the price to cash flow chart, it shows that it's trading one standard deviation below its
averages.
Its mean, right? Yeah. Its median. So it looks undervalued. Yeah. So
I think I remember that we actually bought Alphabet since 2018. I think late 2018. Right. So at the time the valuation was very similar to what you're seeing right now, which is slightly below the average. And then we bought more during 2019. The time 2018 was due to the trade war, right? The Donald Trump first wave of trade war. And of course, 2020, as the COVID came, we continued to buy more. And a lot of time when we bought, Alphabet, usually we bought at that kind of negative one standard deviation, and it has turned out very well for us. Yep. Right. So right now, of course, it's also at the valuation at that time when we paid for it. Of course, the prices is a lot higher now because the earnings have grown so much over the years, and we prefer to invest in good quality companies, right? So Alphabet is one of those companies that fits the bill at the time. Yeah. Right. But now prices have came down largely because they quite a number of bad news has been going around, especially with regard to Alphabet. And this bad news just started, I think, in late 2022 when ChatGPT came out. Yeah. Right. And then the number of users for ChatGPT went ballistic. I think I remember I think they hit 100 million users, monthly active users within like a few weeks. Yeah. Right. So that's one of the faster companies actually grown. All right. So why ChatGPT is so threatening to Google business model is because the way we go around doing search is going to change, right? And in fact, I think it's been changing to some people, right? And I think my kids, next time when they grow up, they might not do the traditional search that we used to do, right? Perhaps they may have a pilot.
What about you? What are your habits now when it comes to search? Do you still use Google? Or?
I'm still old school. I'm still using a lot of Google search. Occasionally, I will use Gemini. All right, I tried ChatGPT in the past, but I still prefer Gemini for whatever reason. But I think based on stats, ChatGPT it's still dominating about, I think, 80% in terms of AI search. Okay. Yep. Right. So they are quite dominant in that way, and I think that is a big threat to Google, right? Because Google has been very dominant on search, and when more people using ChatGPT, or especially when more users are actually growing, actually based on the number of weekly users that I have over here, I think they have grown from like 30 million in terms of weekly users in 2023, and then now I think we are looking at like 400 million weekly users, and it's expected to grow to 1 billion by end of the year.
So there are a lot of users for ChatGPT, and they can be using it for many different things, not just for search. For me, I realized that actually I'm a hardcore Google user for the longest time. I remember using Google since 1998. When it was a long time ago. When it first came out, and I've been using Google all the time. And now, for me, even right now, I'm using ChatGPT to search for things.
Me too.
Instead of using
also.
Google. So sometimes I'm like, okay, there's certain things I know exactly if I search for it in Google, I'm going to get a result, something very specific.
Yeah.
I can use Google for that. But sometimes it's a question that I have, and I think the AI is going to give me a better answer based on this query I have, instead of like putting that in Google and trawling through all the results. So I'm seeing my own habits change, and this is from someone who's using Google for like since 1998. Same for you, right, Victor?
Same, exactly the same.
So,
I think the ChatGPT also getting more powerful.
Yeah.
And it can be used to help in investing also, right? I mean, since ChatGPT came out, I think when
late 2022.
Yeah.
Late 2022, right? I was been testing it for investing, right? Initially it was just okay, right? Then some of the results are not that good, right? But as the time goes by, I think this year when I start using it back again, it becomes very powerful, right? To sort of cut short certain of my investing research time also. Right?
So this links back to their business model, right? When more people are using ChatGPT like Adam or Victor, right? Obviously there will be less demand for search keywords, and this is where I think Alphabet actually monetize the entire dictionary. Every key letters that you can find, they actually monetize it, right? And now with more people are shifting towards having an AI to do the search for an answer, I think that will affect their whole business model. That's one of the big reasons why I think share prices has been coming down, right? And then valuation is trading at like low side.
Yeah. It's interesting because if you take a look at the most recent Q1 2025 for Alphabet, revenue actually went up 12%. So there's still growth, and I mean, majority of the business is still basically in search, advertising. So it seems really healthy, but then at the same time, you have this concern that growth might be slowing down, habits might really change, and I mean, even right now they have AI overview within Google search. So if you search in Google, you have AI generated response as well, which is I think quite useful. But the thing is, if you have that there, then your ads are basically pushed somewhere else.
Downwards,
and that's going to affect the eyeballs to the ad. So even though Alphabet is incorporating AI into its search and all that, because they can't lose out the ChatGPT, they need to have AI as well. It's still a question mark how that will affect advertising dollars.
Correct.
Even though revenue has gone up recently.
All right. So if you look at advertising for Google revenue, I think their account top line is about 3/4 of their entire revenue. And if you go down the bottom line based on operating profit, I think Google services actually account 95%.
So that's the search.
A part of it mainly come from advertising, and that is gonna a part of the business. And if it's gonna be disrupted by ChatGPT, right, that put a lot of threat to their earnings power moving forward, right? And that's the reason why I think markets are quite concerned. Even after the recent trade war sell down, there hasn't really recovered that much as compared to other Magnificent Seven.
So I think the big impact came in when the result, I think one of the Apple result, they say that the search on their Safari dipped for the first time in 22 years. And all of us know that the Safari is using Google search. Right. So that impact the company share price on a single day, I think dropped about 9%.
Wow.
Right.
Okay.
And I just to go back why we invested in Google at that time, I think back in 2018, 2019, 2020, because at that time there was no challenger, right? And they had almost near monopoly on the advertising, right? So if you look at in terms of mobile space, they control Android. So Android, when you buy it, it automatically comes with Chrome, all the things installed, right? And definitely any advertising will reach out to you, all right? And same thing with Safari, and I think Google had an agreement with Apple. I think they were being paid by 20 billion. Right, to secure that default browser, and that's very powerful because that helped them to secure almost 90% market share in search, right? And so both they actually command a high percentage of market share because they control both the tablets and also the laptop and also your phone, right? And they almost cornered the entire advertising market. I mean, apart from Facebook, right, which they do social media advertising, right? And that's the reason why they were very powerful. And now I think the landscape is changing, right? And even the regulator, the Department of Justice, also trying to force Google to break out the Chrome because they are such a monopolistic company. And so that has been the threat, right? And I think right now, of course, the question is whether ChatGPT is really it's going to change the entire revenue model of Google drastically overnight or over the next few years? Right, that's a big question mark that I think market is asking. Right, so I mean, as an investor, of course, you need to question whether all these changes are going to be structural. Right, I think the change towards search is structural. Right, more and more people are moving towards like search using AIs. Right, because that kind of gives them better answers. Right, and now Google is also moving towards that. And I think the reason Google I/O conference, I think they did mention that they're going to transition the whole search into the AI modes. Right, meaning to say that by default, if you use search on Google, I think moving forwards, you're going to have AIs there implemented. And of course, the fear is that it might cannibalize their ads revenue. Right, because people are now spending less time on other links. Okay, it used to be. So this is a question right now that I think a lot of people are asking, and that is going to be structural, the search. Okay, and whether Google can continue to have a strong hold on this eyeballs, right? Now they do have a control over Android, the Chrome, even YouTube that you're watching through here, right? And then of course through this channel they do still have a distribution network. But whether people will use Gemini or search using the AI, I think that is something that we have to answer. Right, and my take here is that of course Google will still have an edge on this to come back, but we don't know whether that is going to play out the way it is. And if you are concerned, obviously based on valuation today, you might not choose not to do anything because the landscape is very different as compared to the time when we bought them. Right. So and of course, if it continue to come down in terms of valuation, let's say it dropped to 10 times, right? That may makes a very good way to look at the Alphabet because the risk reward now is a lot better, right? In terms of price.
So, but I think that at the end of the day, I think a lot of people the concern about Alphabet being disrupted by ChatGPT, like Rusmin said, it's really structural. Okay, but structural change don't happen overnight. It takes time for it to switch. Right, then eventually it will suddenly hit an impact and it just disappear. The old business disappear. Right, you can see in Kodak. You can see in what's the Netflix guy? Blockbuster, is it?
Blockbuster.
Correct. Like gone. Okay, but what's the difference between Alphabet and Blockbuster and Kodak? Right. The thing about Blockbuster and Kodak is that when digital camera came out and when Netflix came out, right, they still believe in their own model, right, and they're still moving forward with that, right? But the thing about Alphabet is, if you look at Alphabet, they still have tailwind segments inside their model, right? Like your YouTube, your Google Cloud, which is the infrastructure, right? And they own the Android, right? Even you want to use ChatGPT, you have to pay for your apps to be used on the Android and all this, and they dominate. So they are still in the tier win industry. My take is.
And speaking of Android, I think if you have a full stack control over the software, the operating system itself, it will be better or easier to integrate even the agentic AI moving down the routes. Right, that is the reason why I think ChatGPT, Sam Altman have been trying to go into the route of controlling the software stack, right? And now Google still have that control over the software stack. So the way they deliver the AI services definitely will be a lot better as compared to ChatGPT. They have a huge advantage there, but of course they cannot be complacent. Right? That's why they are now doing all sorts of things to try to win back the market share. But even with ChatGPT going around, disrupting the business, if you look at the Google Ads or search engine market share, they still have a very strong foothold. I think since 2022 when the ChatGPT came out, of course their I think market share is about 92%, and then has grown, and then recently has weakened, come down to about 89.6%. Even then, it's still quite strong.
But this could actually just be measuring search engine searches. So if everything moves into AI searches, which is maybe not included, this could, it still could have 90% of the search market, but then most people are searching elsewhere. Then there's a different picture altogether.
Correct.
Actually.
But if you were to look at the advertising, yes, majority of the business is advertising. Right. But right now, if you talk about advertising, right, there's probably only a few sources only.
Okay.
Let's say you talk about the US, it's either your Facebook, your Meta, or is it your Alphabet? That's all. They are the sort of duopoly in the advertising space. So if the advertiser don't advertise on Google, there's no other place for them to advertise anymore.
Okay.
Right? You can't advertise on ChatGPT. even though
Yeah.
the eyeballs are over there,
Yeah.
right? They go by subscription, right? So my take is the search market share, I think there's a high probability that it will drop, right? But the advertising revenue, right, will still be there, right? But it's how impactful. I think the next 5 years generally is still less impact, right?
For
So
now,
if we
yeah.
give a very good valuation, right? If the valuation is decent, very attractive, and you know that they have business in tier 1 industry, unlike your Yahoo, your Blockbuster, your Kodak, which are in the headwind industry, right? And they are still dominating in terms of their advertising and search. I think if the valuation becomes a sensible valuation, right, it does make sense to bet because the risk reward is high.
Okay.
But you go in not for a long-term investment, but a short-term distress, and you just exit from the position.
Okay.
Yeah.
Yeah, okay, so I do have data on the global number of searches per day, but this is based on 2024. Things might have changed. And then, so the Google actually also still taking the lead, the huge lead, because about people, I think naturally by default, they'll go to Google search. Okay, but of course, those office-bound users like us, you know, usually we will use ChatGPT more, right? So, but majority users, I think based on the stats, they are still leading, and I think it's still above 90%. But that is changing rapidly.
Yeah,
as we
and
talk.
maybe younger
Yeah.
demographics, Gen
Correct.
Z,
Yep.
could be searching differently. Are you searching using ChatGPT or so Gen Z, our Gen Z video editors
Alright,
using
so that is
ChatGPT to
so
search.
there's a big concern. And then I think Victor mentioned that I think the advertiser, right?
Yeah.
When they want to advertise, where do they go?
Yes.
They can't go to ChatGPT for now,
Yeah.
right? Because ChatGPT business model is purely based on subscription, right? And I think in the future maybe they'll open up, right?
Yep.
Now they're trying the commerce, right? Trying to do shopping through ChatGPT and all that stuff, right?
Okay.
So, but for now, I think next 2 years, the advertiser will still have to go back to Google, Meta,
Okay.
right? Yeah.
So just to summarize, I think we can all agree that I think the way search is being done is going to be a structural change.
Yes. Yeah.
I think that's quite clear.
Quite clear, yeah.
The question now is for most investors looking at Alphabet is that whether in this new structural paradigm, will Alphabet be able to monetize there as well as it did in the past? So that's the question mark.
Yep.
Yeah.
Because they did it really well in the old model, just website browser search. In this new model, can they do it as well? And if the growth is still there, and if Google can't do it, then it's no longer as dominant as it once was in the past.
Yeah.
So I think that's the question we have now. So I think it goes back to right now, like you mentioned, these are the things that are affecting the company. And I mean, it's still a grade A company. It's a great company.
Yeah.
A lot of tailwinds in other
Correct.
areas. It's not like they're sleeping on AI. They are also a very AI heavy company.
Correct.
Yeah.
So they
And
can
they
have,
are also on the infrastructure of the AI.
correct.
Clouds,
Yeah. So it's a lot of tailwinds, like you mentioned.
Yeah.
So again, that's just understanding the business. But valuation is so important.
Yep.
Like if you don't know how to value a company, it's very hard to make a decision whether you should go in and out. So
Correct.
we have this here, which is your price to cash flow chart.
Yeah. So in fact, actually, this disruption has been happening since 2022, 2023, 2024 get even more immense. And at that time, it was quite so funny. In 2024, we know that AI is coming disrupt Google, but at that time, Alphabet, the valuation hit all-time high. That was in the middle of 2024, and we took the chance to actually divest, pare down some of the position at Alphabet. We took the profit, and then it came down, and then it bounced back. I think to earlier this year, the whole market, US valuation for a lot of US stock were at all-time high, and we did also mention in our few roundtables that we continue to pare down, and Alphabet is one of those companies that will continue to take profit, right? And because the valuation tell you that, hey, look, now the risk is going up, right? But at the same time, people are just pricing in because Trump win the election. They were all very happy, and we took the opportunity by looking at the chart. Hey, now it's so expensive, we actually pare it down, take profit. That time we sold about 200 plus, right? And now I think Google at the time of this recording is about 160, which is on the valuation is on the cheaper end side.
Okay.
And the question, of course, whether do you want to add on position, right? Given that the valuation is okay right now, it's attractive, but we also need to link back to the business. Okay, now the business is under threat. The enemies are attacking. Right? The moat is still very strong. Right? They have the full control over the Android, the full software stack. Chrome is now under threat because they're trying to force to break it.
Yep.
Right, and so the moat is shaking. Right, but it's still very strong moat. Right? You're gonna take a long time,
But
huge
you
amount of money.
still want a bigger margin of safety now.
Yeah, so right now, of course, we can looks attractive, but the risk is a little bit higher, so you want to have a better risk reward. So you want to wait for a better valuation. I think that as an investor, you need to come in and look at the whole scenario.
Yep.
Yeah.
But of course, if the market start to price in again and then the valuation went out again, we will continue to pair
Yep.
our position.
Yep.
Yeah.
So like I mentioned in the previous video, right? Everybody also can do valuation. You go to the university, everyone graduate with finance course. Everybody graduate and they know how to do valuation.
Yep.
But valuation is dead if you don't know how to link it with the business.
Yeah.
Like now we are trying to link it with the business. So like right now you see it is at the 1SD, right, which is
Negative,
quite similar to 2022, right? Which is you can see over there in the chart.
Yeah.
But in 2022, the scenario and the current scenario is different.
Yeah.
So
Yeah.
you cannot put them at the same type of valuation.
Yeah.
Right.
Yeah.
But does it means that we need to write off Google? No.
Yeah.
Right. Because like what all the factors that we mentioned just now, ChatGPT won't kill it immediately. It takes time to kill it.
Yeah.
Right. I've read articles of past history where investors still invest in blockbusters even though Netflix came out, right?
Yeah.
But because Netflix didn't immediately kill Blockbuster. It takes some years before Blockbusters went into big trouble.
And in those years, Blockbuster actually did the share price go up sometimes? If
Yeah,
not,
and they profit from it, right? So, but like I said, Blockbusters, all this, they are in a headwind industry. Alphabet is still in a tailwind industry with other components.
Other growth drivers,
yes,
right?
other components inside. And the advertising is, there's only two players
right now.
In the US, we talk about in the US, there's only two players, right? So like what we say, if the valuation become even more attractive, then it does really make sense for a risk reward.
Yeah.
Right. Bet on this company.
So that's why valuation is so important. If you don't have that data, it's actually very hard to do. So
valuation with
the business
connecting back to the business.
I think a lot of people have been asking like, how do you get this data? And it's like it's so important because at least I know, like you said, the valuation. You look at the chart; it's just going up to it's near the upper bound of it. That's when you start paring down.
Yes.
And then now it looks it's below the average. One standard deviation below the average. And then you go like, I think maybe it's time to take a look at it. But you said you take a look at the business as well. Maybe you need a larger margin of safety.
But, in fact, I think our position in Alphabet, after the paring down all the time, all the past divestment, I think our position is pure profit.
Yeah.
So technically, we know that the risk has gone up, but our position there is literally like
you're playing house money, right?
Yeah.
So if you're wondering how you can do valuation, we actually do teach this in Alpha Quadrant.
Yep.
Yes. Yeah.
How you can actually do this for yourself, how you can learn how to do valuation and link it to your business model.
Correct. How do you know it's not every company you must pay at 1SD. There's some companies that you are able to pay at fair value.
Yeah.
Why?
Yeah.
There's a reason behind the business model again, right? Because some companies they'll never in the chance that they drop to 1SD.
Very unlikely, right?
Right. So how do you know you can pay fair value for this company? If you're forever waiting for 1SD, 2SD, you'll never buy into this company.
Okay.
Right. So in the Alpha Quadrant, we will teach how do you link the business, right, and the risk together with the valuation. Right. Valuation is dead. Numbers are
on
dead.
its own.
How you make a story out of a number, that's the most important thing.
Okay.
Right.
Correct.
Yeah, so I think we teach all of that in Alpha Quadrant. If you're interested in that course, we open it once a year.
Yep.
It's open right now. Whenever you're watching this video, it's open right now till the end of May 2025. Do check it out. We also have a 30-day money-back guarantee, so you can check it out, go through all the videos and lessons. If you like it, if you don't like it, you can always ask for a full refund within 30 days. But if you've always been wondering how you can value companies, how do you make a decision? How do you create that? How do you have data like that?
How do you analyze Alphabet?
Yeah, how do you analyze companies? How do you look for companies that have the potential to grow? And valuation is a big thing for you because you have no idea how to value companies in the past, and you're looking for a way to do it. We teach you exactly how to do that in the course.
And the type of business model that we look at, right? Because not every, like I mentioned a lot of our past video, that some companies are just essential for the economy, but they are not good investment. How do you look for all these companies?
Okay, so if you're interested, go to alphaquadrant.com. It's open right now to check it out. And please join us if you want to learn how to do all these things and how to value the companies you're looking at, how to get all that data as well.
All right. We are going to have, I think, one day web class with you guys, going through the whole process and how do you go about analyzing the business from all the way from their identifying their modes to how do you value them.
I think what's more interesting in the web class is that we're going to share two potentially
undervalued companies.
companies
They are in the mid cap. They are not your typical
Yeah.
Max 7.
Yeah.
Yeah.
Right.
So if you're
they are
interested,
potential
yeah.
niche player with
Mm.
very strong balance sheet.
Yep.
Yeah.
So if you look at
yeah.
our previous video on interactive brokers, that was a stock that we invested in
Yeah.
that
Yep.
went up 5 times. So we're potentially going to share more ideas like
Yep.
that during the web class. So
Correct.
join Alpha Quadrant to join that class. All right. So go to alphaquadrant.com. So there's anything else about Alphabet that you want to talk about at this point in time that we should know about when it comes to this business?
No.
That's pretty much it, right? We covered
Yeah,
most of it.
I think you covered everything.
I think everyone knows
Yeah.
the qualities of the company.
Yep.
But it's the risks that
Yeah.
we need to be aware of. I
Correct.
think that's the most. I think that's
I think that's the interesting part about investing, right?
Yeah.
Because 2 or 3 years ago, we were saying that this is a dominant company.
Yeah.
Nobody can read. If 2 or 3 years you ask me which company I want to hold forever, I would say it's Alphabet.
exactly.
Yes.
Right.
Yeah.
But
Now
it's just within 2 or 3 years, things just change, you know.
Yep. Yep.
Right. So it really shows you that investing is very dynamic.
Mm,
Yeah.
Yeah.
So, and you kind of see that as a portfolio manager yourself, or when you're managing your own money, you don't have to like stick to Alphabet, right?
Yeah.
If let's say
Yeah.
the whole business landscape change, you can always switch out, right? And then change to a business that you think is going to continue to grow over the next 5 years to 10 years,
Yeah.
right? And then I like entrepreneur when they are stuck with the business, they are stuck
Mhm.
forever, right? Very difficult to switch out. But as an investor, you can easily call it a quit, and then you just,
Yeah.
rotate your money. And that's why portfolio management is also very important. You don't just look at one company and then stick to it, right?
Yeah.
You want to manage the whole portfolio, and by diversifying them into across different companies.
And you have to consistently revalue
Yeah.
the company
Business,
and see
yeah.
whether is it still relevant to the current market, right?
Yeah.
Alphabet is a really, really big example of things that we really thought is dominant and is
Now it's not so.
now
It's
not
a
so. Now it's
question mark,
really a
right?
question mark.
Yeah,
Right.
yeah. So and again, knowing how to do valuation,
Yep.
it gives you allows you to know when to basically sell.
Yeah.
And
Yep.
maybe buy if it takes the risk reward ratio makes
Yep.
sense. All right, so that's pretty much it for this case study. Alphabet.
Yep.
Yeah. So we just want to share it with you. One of the it was my number one company for the longest time, and
Yeah.
it's really
It's no longer there.
no longer that. So,
Yeah.
but then if the valuation makes sense, we might
Yep.
actually buy it
Yep.
again. All right. So with that, you only can do that because if we know the valuation.
Yep. Just hope for more bad news.
Yeah. So if you want to learn how to do valuation, please join Alpha
Yep.
Quadrant. Open now till the end of May. Go to alphaquadrant.com. We hope to see you there on online videos and of course a live web class
Plus, yeah.
with Victor and Rusman as well. All right, so go to alphaquadrant.com. With that, that's pretty much it. Right,
Yep.
guys?
Yep.
Okay, so my name is Adam, Rusman, Victor. Thanks for
Thank
joining
you.
us. Any questions about this? We're happy to answer them in the comment section. Of course, if you like our roundtable, please hit the like button and of course subscribe when more roundtables coming up, and we'll see you again.